Hey everybody, this is Evan Carthy from evancarthy.com doing the weekly review slash preview for the week of, well, now it's Sunday, March 29th, 2020, in the middle of the corona quarantine crisis. But anyways, here we're going to talk about the S&P 500 and the Dow Jones. So what we're looking at right here on this chart is the 15 minute, excuse me, that's 1 hour. Do not want that. I want the 15 minute. Yep. So here we're looking at a 15 minute, and what we're looking for to beginning this week, starting up here in about 2 hours or so, when the markets reopen, is I'm looking for price to move further down here, and here's the reason why. So using this swing low down here and that swing high, you can see on Friday down here we had two reasons why price bounced off of it. One of them, it hit the 50% retracement level, and the other one, if we use that swing high up there and that swing low down there, you can see how price hit the target box between the 1.272 Fibonacci extension level and the 1.414 extension level as well. So between those two things, let me just show you here real quick. On Friday, plus it hitting the 50% retracement level, it created definitely support for this move right here. And then you can see coming out of it, there were definitely some two-legged moves out of here. You had first that one right there that went down to the 50%, hit the target right up there, and then another one right over here. So before, well, if you keep on dragging this down, the target area to look for, you can see on Friday where it finally came back. See down here in the morning when the market opened, probably about 8:30ish or so, price came down there, hit the 50% level, and was also hitting that 1.272 level down there. So then from them, it started rising back up, and as you drew the Fibonacci retracement level to follow it down further down here, the first level you're looking for resistance to be around 50%, so got right around there, created some resistance, blew through the 61.8, but then when price got close to the 78% level, that was it towards the end of the day, and the market just sold off. So once it did that, that kind of showed me that we're probably looking at a measured move down here, which is going to be a little bit higher for one because it's shot past the 61.8, closer to the 78.6 up here. But you can see it closed back down. So the level I'm looking for at the beginning of the week for the market to move down to would be this box down right here, because this is the target box from this move right here. In fact, I drew it down here. Let me move the Fibonacci extension levels. So between those two, you're looking at a target between about 2470 all the way down to about 2452. But I really think it's going to go down to the 2452, and then we will see a lot of support down there, because if you're using, or I'm using this Fibonacci retracement level as support levels for it, it hits off the 78.6 level perfectly, and the 1.414 bottom. That's the bottom of that rectangle right there. So I'm looking for support. Major support come in around 2453 for the level, but until then, I'm just looking for short setups for the S&P 500 here to start off the week. So any type of rallies I get up of it, I am looking to short them until it gets down closer to this level between about 2471 and 2451. Then after that, I'll be looking for both shorts and especially long setups as I look for a bounce off of that right there. So definitely here in the earlier parts of the week right now, and looking at the 1 hour chart right here, looking for some more downside for the S&P 500 market. And then if we go out to a longer term right here, here's the continuous contract for it right here. You can see that price has it barely, let me move this Fibonacci extension level right here. So price on it right here has bounced off of, just came up short from this swing low down here, using that swing high. Barely missed the 78.6 level, but has found the support zone right over there for it. If this is going to be an expanding triangle top up here, here you have 1, 2, 3, 4, come off the low of the fourth point. That is going to be so. Then we're looking for the market to eventually come up, break this top up here of around over 3,400, and the target area is about 3827 for it. If that happens, then definitely be looking for some type of pullback, depending on how big it'll go, who knows. But if this is expanding triangle, doesn't necessarily mean it has to be, but it is setting up very nicely for it to be one right here long term for the S&P 500. Then if you want to follow the Fibonacci extension level down right here, right now we're in a little bit of a no man's land here on the daily chart for it, because if you use this Fibonacci, let's try to get it this time. That Fibonacci retracement level down right there. You can see we still have a little ways to go between hitting that 50% level up there, and then if you use this swing low down here, dragged up to the top right up there, you can see we are still a little bit of ways from it down here, down on that one right there. So which is around 2409. So going back over here to the 15-minute chart for it right there, I'm looking for a little more downside start off for the week, and then after that we'll see what happens with the market. Now moving over to the Dow Jones over here, kind of similar situation that we had right here. Looking at price coming back down here. There's a target box right there that I drew for it. You get a little bit closer. Down right there for it. See price has bounced off the 61.8 Fibonacci retracement level very nicely, and it's starting to move back down closer towards it. Then if you, and then using this Fibonacci retracement level right here, there's the 78.6 box. So it looks like it could be a little bit more deeper of retracement depending on how far it goes down this target box area, but still around 2941. Looking for some support to come in for the market. Until then, my bias is a short side for the Dow Jones until it hits the 78.6 plus the target zone from that move right over there. And then kind of similarly, you can see how price on Friday came down, hit the 50% level right here, bounced back up towards it before it started making that retracement back down. But what you had moving back down this way was you had a very nice measured move. You see it came up here and hit the 50 to 61.8. Came on here the target zone and went even a little bit further down for it before it found a retracement level when it was hitting off with a 50%, almost down to 61.8 bucks. And then just like the S&P 500, late on Friday, last Friday, it sold off, and so that's what I'm looking for. It's continuing to move on down here until it's around the 78.6 level at about 2942. Then looking at the daily chart for it, we have using this swing low all the way down here, which was around the financial crisis levels down here at the very low for it back in 2009. You can see price has found support pretty much almost to the nose, to the 50% level right here, and it started bouncing off of that right up there. So again, if we're going to use this, draw this Fibonacci retracement level down right here, we're still a little ways from this 50% level up here, so there definitely could be more upside to come in the market after that first downside just mentioned a little bit ago happens. And looking at about 2381, excuse me, 23,811, and then right here again, middle of no man's land right here, still a ways away from this Fibonacci retracement level 50%, which is 2313. So if you go back up here to the 15-minute chart for it right there, 2313 is all the way down around right over here right there. So if it is going to come down and hit that 50% level before it does something, it has to move further than this current move for it and be looking for another kind of measured move back down for it. But definitely starting off early in the week, looking for more downside in the market until it hits those two levels. And the support level looking for the Dow Jones is going to be around 20,942, and then for the S&P 500, once again, we're looking for a support level around here, around 2452.75. It doesn't have to hit up there perfectly, give and take some, but that is the support level I'm looking for. Until it hits then, and this move does play out, definitely looking for shorting those two markets right there. So that's the S&P 500 and the Dow Jones weekly recap / preview for beginning of the week for March 29th, 2020. Probably another crazy week again as the stimulus bills keep on getting passed. So we'll see what happens. Anyways, be safe out there, and talk to you later. Thanks. Bye.